Hi, my name is Ryan Harris. I'm coming to you from HomePad Lending. I just wanted to go over the two most important things that you should ask your loan officer when you're purchasing a home. I think it's honestly crazy that a lot of loan officers out there, they will go over the process of how to buy a home with a client. First-time home buyers, repeat home buyers, it doesn't really matter, and they don't go over these two very important things. It's extremely important to ask them if they haven't already disclosed this information to you. The two most important things, though, are the first being, what is my total monthly expense, right? Or what is my total monthly payment that I'm going to have on the house that I'm purchasing, right? So you go out and you want to purchase a home, and the home costs, $400,000, and you're putting X amount of money down. You need to know what that total monthly payment is. Not just the principal and interest payment, which is what you're going to pay the mortgage company, but you need to know what it's going to be with taxes and an estimate for insurance included. Now, what we typically do is I'll give you a range, usually within $100 to $200 of where the final payment will be, because taxes and insurance can vary from property to property that you select, but you need to have a general expectation of what you're going to pay on a monthly basis. I can't tell you how many times I get a call after somebody already has a contract and the proper, it's been accepted by the seller and they're expected to move forward, and they had no expectations of where the monthly payment is, or the monthly payment's $500 or even $1,000 higher than what their original expectation was, or where they were expecting to be at the onset. Or maybe they just saw the principal and interest payment and they didn't understand about the taxes and the insurance. So it's very important to understand what is the total monthly payment, total monthly liability. You will have some properties, you'll even have HOA fees that'll have to be paid as part of the mortgage. It's not included with the mortgage, but it is a liability associated with the property that you should also be aware of. Some properties I've seen $800,000 a month HOA fees. So it's very important to be aware of the total expense with the property, which I think is understated, and a lot of loan officers don't cover with their clients. Second most important thing, number two, is what is my cash to close going to be? Not your down payment, not the amount that you're going to put down on the property, not the closing costs on the loan, because people get focused around these two subjects, but what is the total amount of money that I need to close on the property? Extremely important, because once again, I cannot tell you how many phone calls we get where the client didn't have any expectations of paying any closing costs. They just understand it that they need, like if you're buying a $400,000 house, you're putting 5% down. You'd be putting $20,000 down on the property, but the loan officer sets no expectations in terms of what the closing costs on the loan are going to be. Typically, closing costs, at least here in Arizona, are going to run $5,000 to $7,000 for a purchase transaction. It does scale up and down depending on the price of the property, though. So you want to get a quote on that, but you need to know, what is my total out of pocket to acquire the home? That's the second most important question. Once again, not down payment, not closing costs, total out of pocket expense. So those are the two most important things that I find that loan officers don't cover with their clients. We make sure to cover it on every single transaction, because we don't want any sticker shock once you actually get a seller to accept your offer and you're expected to move forward on the property and purchase the home. Even going back to like my early career when I started in mortgage, it's been over 10 years, but when I bought my first home, I specifically remember they approved me for about $400,000. I went out shopping for $400,000 homes because that's what I was approved for. But I remember I had no expectation of what that monthly payment would be. When I actually got the property under contract, I got the loan estimate, and the loan estimate said that the property was coming in at around $2,000 a month. At the time, I had never even paid more than $1,500 or $1,600 a month, because that's what rents were running at 10 years ago. I just remember having all this sticker shock and anxiety because this was $500 to $600 more than I had ever paid. Could I afford it? Could the bank still approve me? Yes, it could, but it's important to manage your expectations when you're acquiring a home and making sure that the monthly payments are within a comfortable range for you. It doesn't really matter what the bank approves you for if you're not comfortable with the monthly expenditure that you're going to experience once you actually own the property. So just a little personal experience, but like I said, total monthly payment and what is the cash to close, those are your two most important things when you're acquiring a home. Everything else is kind of filler information, and it'll all add up to that, but those are your bottom line figures that you absolutely have to know so you have appropriate expectations when you go to acquire a home. Thank you, and hope you guys have a wonderful day.